Hello everybody and welcome to my channel. I'm Jovanes and today we're going to discuss about the current stock market correction, and most importantly, I will share with you what I'm currently doing with my own portfolio and 3 stocks that I might buy soon. And last but not the least, my opinion on what you should do. Please bear in mind that I'm not a professional financial advisor and you should not take anything I say as a financial advice. I see many people on YouTube and elsewhere calling the stock market correction a stock market crash. But I don't think if this is actually a market crash. I don't know if people are really think this is a market crash or they are just labeling it as such to attract more attention or more viewers. Personally, I would call it a market crash if the whole market went down 10% or more and rapidly. But this is not the case. By the time of making this video, the NASDAQ, for example, that is one of the major indices that had a big drop, is down less than 10% from its all-time high. And that happened in a month and not during a few days or a week. Surely, some stocks have crashed, with the most popular probably being the Tesla stock that is almost 30% down in the last month only. And some days it went down in big chunks. But even in this case, let's not forget that it's about 280% up year over year. And I'm not even calculating this amount from the lowest point it reached in the middle of March last year. I like Tesla, I own shares of Tesla, and I love electric cars. I don't want to bash Tesla, but Tesla is far from being the whole market. Just think about the fact that during the last month, while Tesla is 30% down, at the same time, Volkswagen Group is up about 20%. So my first advice would be don't panic and don't sell your ownership in companies if the company itself is doing well and has a good potential. Would you sell your house tomorrow if the house market went down? I don't think so. But regardless of whether we call this a stock market correction or a stock market crash, the question is the following: what one should do in this current situation. So first I'll tell you what I'm doing right now, and then I'm going to try to explain you why I'm doing it. And actually right now I'm looking to buy more into the market. The lower the prices go, the more I'll be buying. Right now I have buying orders for 3 different stocks on my brokerage account. And if they drop under a certain limit, I'll be buying them automatically. Market corrections after long upward runs are quite common, and let's not forget that the valuations have been a bit high lately, so it's not that surprising that there is some correction happening. What you should do is look at the fundamentals of a company, its future business potential, and ask the following question: is that company going to be profitable long term? Is the current price justified by those expected future profits? As I said, I have currently buying orders for 3 stocks on my account. So first I'm going to tell you which companies I have the buying orders for, and then I'm going to tell you at which prices I'll be adding more to my existing positions. The first company I'm looking to buy is Pepsico. I like Pepsico because it's a company that will perform relatively well whether the economies around the world reopen and stay open or not. The first thing that I would like to mention about Pepsico is that this company has been paying dividends for the last 49 years. And not only that, it has been increasing year over year its dividend for 49 years consecutively. It is remarkable. It is well diversified. It has more than 20 major brands, with each of those generating over $1 billion of US dollars of revenue each year. It produces and sells both those unhealthy but yummy stuff, but it also has been investing more and more in healthier beverages and snacks and products in general. Personally, I'm a huge fan of SodaStream, for example, and it has been a nice way for me to cut down my sugar intake. Sure, PepsiCo is a bit expensive with a trading price-earning ratio over 23, but for a company with a track record of PepsiCo, you are going to pay some premium, and I'm fine with it. If you want to be protected from a market downturn, you want some good and stable dividend-paying companies with a good track record in your portfolio. If the market really crashes or goes into a bear mode, you want to have those companies in your portfolio. You can take those dividends and buy bargains that definitely will appear in a bear market. The next company is Barric Gold. Barric Gold is a Canadian gold mining company with international mining activities. It has a trailing price-earning ratio of about 17, and it seems for me to be priced more reasonably currently, especially if one considers that it's a good hedge against inflation. My thought is the following: if the inflation fears realize and we have inflation rising in US and Europe, then the gold prices will start rising too. With gold prices rising, Barric Gold will increase its profits substantially, pay more dividends, and maybe even get a higher valuation in the stock market. So for me, it's also a hedge against inflation. The last company I'm looking to buy is Xiaomi. I like Xiaomi first as a customer. I've been using Xiaomi products over a decade already. They have great products and offer a great value for money propositions. Here the price earning ratio is a bit rich, a bit high, but Xiaomi is a growth company and it's still growing. So judging it only by the price earning ratio would not make much sense. I think it still has a lot of room to grow. It's already strong in Chinese, Indian, Russian, and other big markets. It is also well diversified and it makes not only phones, but a whole ecosystem of products. If I listed all the products that Xiaomi produces and I have been thinking about buying, this video would roll at least for another hour. And if I listed only the stuff I have already bought and I enjoy, I would need another 10 minutes at least. I think that the current market capitalization of about $80 billion is a joke compared to what it will be doing in 5 years from now. If you live in the US though, you might think it twice before buying any Xiaomi shares. Unfortunately, US government doesn't want you to invest in Xiaomi, so you might not be able to hold on those shares long enough to benefit from the future growth of the company. And now finally, the valuations at which I have my buying orders. For Pepsico, I would like to add more at my position at 105 euros, and for Barric Gold at 15.5 euros, and Xiaomi at 2.55 euros per share. I would be willing to buy even at a bit higher prices if I didn't already own some positions in this company, in those companies. So the logic is the following: because I already have some positions in those companies, I'm not worried about missing to buy at the dip, because I already am invested in those companies. If the shares end up going higher, then I'll be profiting from my existing positions and I don't have to have a FOMO about buying in right now. Actually, while I was preparing this video, Xiaomi order got executed already. So to summarize, if you're an active investor, you should be less affected from the overall movement of the market. You should research the company's fundamentals, their potential, their current valuation, find those that are cheap and buy them. Or, if they are not cheap right now, maybe they will get cheap during this market correction and then you can buy them. If you are a passive investor and you're buying into ETFs, then you should just keep buying regularly and dollar cost averaging into the market. Actually, you should be even happier that you got more equity for the same money this month as you got last month. That's the power of dollar cost averaging. Many people have tried to stay out of the markets, to time the market, and failed. Remember, historically, the dollar cost averaging has been performed better, especially when we are talking about investing into indices like the S&P 500. So tell me in the comments your opinion about the companies I mentioned before, but also what do you think about the current stock market? Do you think it's just market correction, a temporary thing, or you think it's a beginning of a bear market or a market crash? And if you like this video, please click on the like button to help promote this video. It takes only 2 seconds for you, it costs you nothing, but it would help me a lot. If you would like to get more of my content, you can also subscribe to my channel and click on the notification bell so you get notified whenever the next video comes out. Thank you for watching and see you next time.